Two Bulls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
Think about a bicycle. It takes balance to get where you want to go. Now think about business. Whatever your business or organization, you ride the line between numbers and people. Just like the bike, it takes balance. CLA, CPAs, consultants, and wealth advisors. That's CLA. We'll get you there. Clifton Larson Allen LLP investment advisory services are offered through Clifton Larson Allen Wealth Advisors LLC, an SEC registered investment advisor.
You made it. Here, finally. Checked out of office to check into the sweet views of that place you've always wanted to go. You know the one. It's nice. Even the kids like it.
This place is so cool.
And they never like it.
Mom, can we go to the pool?
Look at that. Not even asking for the Wi-Fi. When you're with Amex, it's not if it's going to happen, but when. American Express. Don't live life without it.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Hello and welcome, everyone. Welcome back to the China Shop. We're so excited you made it. We're opening up the doors today for another special guest interview episode. As always, I am Shopkeeper Dan. With me is Kyle, creator of FinancialIneptitude.com. Kyle, how's your day going so far?
Not too bad. I'm not going to lie. I do have a breakout order waiting to see if it tags this low here, but I'll try not to be too distracted.
Oh, that's fantastic. Fantastic.
Yeah, normally we do these aftermarket close, but...
Yeah. Well, you know, if we hear you jumping up and down screaming that, honey, I can finally afford that third car, we'll know what happened.
More than likely, it'll be, God damn it, there goes my profits for the day.
God damn it, ramen again tonight.
Right.
Yeah. Oh, well, folks, sit back. We are joined by a very special guest today, but none other than James Andrew from Lightning Bridge. How you doing today, James?
I am doing great. Happy to be here.
James, what is Lightning Bridge? It sounds dangerous.
Well, I don't think it's dangerous at all. It is quite powerful, but not in a dangerous way. You're riding on it. You're not being hit by it.
How many gigawatts does it take?
What we're doing, we're one of the first companies to work in the space of connecting a technology called Bitcoin Lightning, which is a layer on top of Bitcoin, with other chains. And so essentially we're doing trading behind the scenes on behalf of customers that want to move into and out of these other tokens, with a special focus on stable coins like USDC, which is becoming a much more and more popular asset on many, many chains. And usually when you want to buy it or sell it, you're dealing with credit cards, onboarding and things like that, and bank connecting with banks and all. But we've got a way to do it with Bitcoin Lightning, which is an up and coming network that I believe makes Bitcoin far more powerful than it is on its own.
Interesting. So wait, so Dan and I recently came into possession of some crypto from a startup, Skydle tokens, and neither of us have figured out how to even consider selling it. So is that something that this application could help us with?
Well, I don't know. I'm not sure what kind of token that is. I mean, if you could turn it into USDC on an exchange, then you could use our app. A lot of those little tokens, the problem with them is they're only listed on some centralized exchanges. So to get them out of the ecosystem is not simple. We're mostly focusing on the major tokens like USDC and the base tokens of the chains that we're on, like on Solana and Polygon and all. There's so many hundreds or thousands of tokens.
I know.
It's a pain right now. We have to start somewhere with the big ones.
Well, before we get too far ahead into what you're doing now, I want to make sure we take a minute here to kind of talk about like your background, like how you got into to Wall Street in general. What's your journey, like
your origin story, if you will.
I have a pretty unusual journey into Wall Street. I was just this kid out in the Pocono Mountains, like west of New York, growing up there, riding motorcycles, snowboarding, rock climbing and all that. And right out of high school, I ended up, meeting someone, or it was a friend of ours whose father was, someone that had a long, background in investment banking on Wall Street. And I got to hanging out with him. When we go over to the house, I'd start talking with him. And I, at that time, discovered somehow through another friend of mine that there was this thing out there called day trading. You got to remember, this was brand new. It wasn't a thing that people did. We're talking, this is probably 1997. And back then, if you wanted to interact with the stock market, chances are the most cutting edge thing you were doing was using Charles Schwab.
Yeah, right.
And before that, if anything, if you were maybe like someone with a little bit more net worth, you might be dealing directly with like your broker at Merrill Lynch. And they were charging you at that time $1,000 to buy 1,000 shares of Intel. That was the commission. Yep. Right. Wow. And then along came a game changer, massive game changer. The first one that came out was called Daytech Online. It was the first website that said, you know what, we're going to do this different. You can come in here and you can trade for $20. Whoa. And we're going to give you direct access to market data. I mean, this is unheard of. And right around that time, there was also this thing that happened called where there started to be these places that you could go to do trading, to do day trading in these big rooms, almost like video arcades for adults. Just picture like 50 trading terminals, right? And the minimum account size is like, maybe like you could open for like 20 grand, but then you'd get leverage on that. And you'd have people coming in there and just banging on the keyboard all day long, yelling and screaming. And it was almost like a multiplayer game party, except there was high money stakes, right? And I just thought, this is so cool. I got to do this. And so this guy actually funded a NASDAQ trading account for me. And I ended up flying out to Houston to do this professionally. It just went from like zero to doing that. And, I started actually trading for a while, but then transitioned over to running. I ended up running the New York Wall Street branch of this company. It was called Block Trading. It was one of the biggest ones of these firms. Before you know it, I'm like I was commuting from Pennsylvania to Wall Street every day as like a 19, 20-year-old to run a trading floor. And it was wild. I was in charge. There was no one there. Like the guy that was running it before got recruited by this thing called the Island ECN, which a lot of us old timers remember was like it was sort of the first alternative market, the ECN market that gave NASDAQ competition. He went to run it and said, you take my job. And I started running trading floors. And then I ended up moving over to another firm called Andover, where I ran the whole firm, operated it for a while with 24 trading floors. And I was all running through my desk every day. Like it was like air traffic control meets a military operation.
Wow.
And it was so intense. And I just learned how to do it on the fly. And I learned how to we're talking like server rooms with lines in from NASDAQ and from all the alternative markets, et cetera. And then I noticed something. While I had a little bit of freedom because we had just done a deal with this company and we had brought some money in and we had our own floor. I said, you know what? I bet I could automate this. I bet I could figure out how to look at what these traders are doing and automate it. And so I actually did that. I sat down and I spent 30 days like trying to like just hack at the keyboard, looking for an opportunity, like trying things and say like, what could I do here that I could repeat by putting a computer on it to automate it? And I found something. Something that became, I later called cross-exchange arbitrage, whereby I would look at we would have the quotes from there was multiple places that NASDAQ stocks were traded back then. They were traded on NASDAQ, but they were also traded on these other markets like Instinet, Island, Archipelago, Bloomberg. And it was all these different markets and most people didn't have access to all of them, but we did. So I ended up finding a way to look look when there was a low bid, let's say on Instinet, because the book had fallen off. And I would go in and improve that bid with the idea that as soon as I got hit, I could flip it to the higher bid on another market and we could do it on the offer also. And it worked. And it worked for a few years. I had these programs running that were just bidding and offering all over on these all NASDAQ 100 stocks and making these little arbitrage trades that were very successful for a while. It was actually a very exciting time.
So you basically brought stability to the books.
It's funny you mentioned that because, that is an actual, people say what's good is day trading, what good is automated trading? Well, I called it liquidity routing. You're moving liquidity from one place to another, and you're bringing stability to the books.
Man, okay. So let's rewind just a second here. You said you had somebody that you talked to that kind of that sponsored you, basically. You funded. Like, what did you say to this guy to get him to kick up an account and like fund you?
Oh, this is many years ago, but I just remember saying, look at this opportunity here. There's this possibility to get this close to the markets, and not many people are doing it yet. And it was so exciting. It was kind of like back like when crypto first started, and everyone just realized there was something big here. When day trading started, it felt the same way. The people that were smart knew there was something going on here and going on here big, and it was just that was about it.
You didn't have to show them like, okay, these are the paper trades that I've made. Like, you didn't have to prove that to them. Like,
there actually is, no, I hadn't traded it all. There actually is another part to the story, which I didn't tell, but it's kind of important and it's kind of funny. When I was calling around to these places to find out where we could do this was before he had committed an account to me. I called up one of this place called Block Trading, and the brother of the owner answered. Right. And he said to me, we're expanding to 200 offices, but we're trying to raise money. We need to raise $10 million. And me on the other end, I said, my friend used to be on Wall Street. He could probably get you that money. And he said, oh, let's do it. And then about 3 days later, the owner of this firm flew out to Pennsylvania to have breakfast with me and this guy to negotiate a $20 million was private placement that never actually happened. But it was like I brought this investor together with this guy, and we're all sitting there at the table, and it was just sort of decided, James should really go out to Texas, go out to Houston and learn to trade and trade. And it was just done. So that was my first business deal.
Wow.
It's that easy, kids. It's that easy.
Yeah. This was it was being in the right place at the right time and making the right phone calls. No, you know what? It was making the right phone calls. I saw Steve Jobs talking about this, about how when he was younger, one of the first things he did to get kicked into his career was he just called up Bill Hewlett from Hewlett Packard, like one of the biggest guys in the world at computers, and asked him for some electronic parts. And the guy was so impressed. He gave him a job as an intern, and that kicked off his career. And he made the point. He said, look, there's a big difference between people that make the call and just try to go for the thing and people that don't. And you never know what happens. Sometimes you'd be surprised how easy things can come together when you make the call or you do the thing. And so I think that was an example.
That's an excellent point. Sometimes you just got to take the plunge and just go for it. Just try it.
Yeah.
Because what's the worst that would have happened if they said no?
Oh, it just wouldn't happen. I would have gone snowboarding or whatever. I was a kid. I was young.
You would have found another opportunity and tried your luck there. Yeah. Oh man, that's a hell of a story.
But it doesn't really particularly have a very happy ending at that time, because what happened then, and this was the late 90s, early 2000s, Wall Street. I, as one that didn't have like the background of a lot of these people and the deep pockets of a lot of the people I ended up dealing with, I ended up having these programs all stolen from me. I mean, literally stolen by various partners and or heads of firms that would just see these boxes and say, we just don't need James. Let's go take his boxes. And I'd come in and all the computers would be ripped out of the wall and running somewhere else. And they're like, sorry, we took them. And then I'd have to go, what are you going to do about it? Essentially, like we're talking bad guys. There was some real bad guys on Wall Street. Not to say there's not now, but I mean, you hear about it, but like a lot of guys that get to the top at these firms, they got there because they're more ruthless than anyone else. It's just, and I kind of was at the brunt of that. And so I ended up essentially being driven out of Wall Street. I mean, I made some money along the way, but it didn't go to where it could have. And I ended up leaving and just doing what I call like 10 years hard time in cubicle world. just coding and like working as a programmer. And then that kind of led up to where we are now, the path to starting my own company when I saw crypto.
Mm-hmm. So why did you make the switch to crypto then? Is it just because it's new and you see opportunity to be innovative there, or is there something else that draws you to it?
When I first, I was less and less interested in the traditional markets, because as more and more of like the high frequency trading firms came in and the institutions came in like the mid 2000s, it felt like the opportunity for a regular person to figure out how to gain alpha on the market was less and less and less and less. Mm-hmm. It was just saturated. And if you remember, for a while, retail trading was just kind of dead. Like it wasn't a thing that people did for a long time. And then in 2017, I saw the crypto exchanges popping up, like Poloniex, GDAX, these ones that were back there, Bitfinex. I saw these and I saw the screens and I saw the way they moved, and it felt like a reboot. It felt like a reboot of markets. And it just felt like, wow, I saw the spreads and the way that they moved. And it felt like this reminds me of the old days when it was sort of exciting and there was a lot of opportunity. It felt like potentially there's that much opportunity again in these new markets.
So it's a way it kind of takes like what you did for bringing liquidity to the different books. You kind of have the same opportunity here now with crypto and the different networks that are all just kind of like spread out all over the place.
Well, yes. And there was one other thing that I developed back then that I didn't mention yet. That is what brought me back into the market with here. Back when I was running my trading programs, I started applying 3D graphics, like real time, almost like video game graphics, to represent the actions of my programs and the actions of the order book. I came up with this way of representing the order book in 3D over time. So like imagine a depth chart, you just see like the histogram, you see like the wedges, right? Imagine if you take that and extrude it and you send it back through the screen in 3D. So you see the patterns developing in real time. And I always had this idea that this could be like a new type of level 2 order book, and a new type of trading could arise around like playing the game of learning to read this thing. And I had tried to market it back in the day, and it didn't really catch because it was very early and there was a lot of reasons. And so my first foray into crypto was building a little prototype of this thing that represented the markets in 3D. And that was how I actually first got my company funded to build. We first started to build out trading tools around this, but we've since pivoted as we've seen bigger opportunities.
Huh.
It's hard to explain without a visual here, but it's an audio. But
I'm trying to think of like how that would work. So like, what are the different axes represent then?
The axes is left and right. You have price. You have the price plane, I call it, and then in depth you have time. So it's almost like taffy coming out of a taffy machine. The taffy gets pushed out of it. Imagine if you take a snapshot of the order book, where the bids, where the offers are. And I like to do it not even cumulative, just with like bars that represent where the orders are. And then you plot that, and then you take another snapshot a half a second later, another snapshot, and you stack them up back. You start to see patterns, and you even see the actions of bots in there. And then you overlay the trades on top of it as like blocks that are taking out the other blocks. And it turns the market into sort of a video game kind of a thing. And it's still something that I would love to bring to the world, but I just haven't been able to kind of find the product market fit for it right now.
If you do figure that out for Sierra Charts, send me a copy because I'd love to check it out.
For futures,
yeah.
I'll send you guys a video after so you can see what I'm talking about, but I think you'll get it.
Do you have one that we can link for the episode description in case anybody else wants to check that out? Perfect.
Yes, I do. Yes, I think I do.
Okay. Okay. Well, let's move on. Let's talk a little bit more about some crypto then.
One thing I'd love to talk about, because it's what I'm really excited about now, is Bitcoin Lightning and what that is and how that fits in. Because this is something I think that everyone should keep their eye on, because it is a new type of infrastructure for moving money around. First for Bitcoin, but soon it will allow moving of other things, that's growing at a very high rate, even with the market falling off. So
can we back up just a second and tell what need is that filling? Like, why is this important?
Yeah, this is a great question. Bitcoin, while Bitcoin has some really great features, one of the features of its security is that in order to move it, you're talking at least 10 minutes and really more to move it, because you're never able just to zap a quick payment on Bitcoin because of the way the Bitcoin network moves forward, like at 10-minute paces. There's things called blocks that are made every 10 minutes. And so if you just move money on Bitcoin, you're not going to see that movement of funds until a minimum of the next block, 10 minutes. And so that is a problem on its own. But when you add a feature on top of it in a layer. I mean, if you think about layers are like what the whole internet is always built in. You've got layers, you've got like the TCP/IP down below, and you got your applications up above. And you're always building in layers when you're building network stuff. Bitcoin, I like to think of as a layer on the internet that moves money around. But now you need a layer on top of that to move money around quickly. And that is what Bitcoin Lightning is. What it does is it enables anyone that runs a Bitcoin node, like if you had a Bitcoin node at your house or at your office or whatever, either of you can also run the Lightning software on it. And the Lightning software allows any two nodes to establish a liquidity channel. A channel where you actually stake Bitcoin on the channel. It's almost like an escrow that locks the Bitcoin. And once you have that, that Bitcoin locked, like let's say we put a Bitcoin in a channel. What that means is we can go back and forth with up to that amount as many times as we want. You can basically push the Bitcoin back and forth through the channel. And what's interesting is then if another person makes a Bitcoin Lightning node, they can hook it up to the network and you start to get these connections. And if I want to make a payment, it will actually route from one node to the other, to the other, to the end almost instantly. And along the way, each node earns a teeny fee. Usually, like we're talking like 100 parts per million of Satoshis, which is there's 100 million Satoshis in a Bitcoin. So it's very inexpensive. But what happens is there's now thousands and thousands of these nodes all over, and you're starting to be able to zap little bits of Bitcoin or big bits of Bitcoin. The capacity is going up and up all around the world instantly. And you're starting to see institutions adopt this for moving funds inter-institution between two institutions. For example, I have Lightning nodes set up with Kraken and with OKCoin, two of the big exchanges. And that means I'm able to deposit funds and withdraw funds or move funds from one exchange to the other almost instantly. And when you are trading, that is always a big part of many kinds of strategies, especially arbitrage strategies. Being able to move your money where it needs to go quickly makes for more efficient markets. And what we have with Bitcoin Lightning is the fastest, most efficient way to move value around it. That's out there. It's the fastest network for it. And I think it's something that's going to take on more and more energy and may become a very big new network that can even compete with the global clearing networks like SWIFT that are out there.
Oh, wow.
Yeah. And one final thing I'll mention about it is it was right now, it's originally used to move Bitcoin around, but there's a new protocol out, which is going to allow the issuance and the moving of other assets that you could issue on this network that are representative of assets on another network, for example. So pretty soon you'll be able to represent arbitrary assets on the Bitcoin Lightning network and move them around with this speed and efficiency. And so I think it's something that's really good to keep your eyes on. And if you're technical at all, want to play with it, just setting up a Bitcoin Lightning node is a really cool experience. And you can actually earn yield on your Bitcoin now just by setting up a node and actually charging these fees to route the payments.
What do you need to set up a node? I assume that you got to have enough liquidity to be able to handle some of those transactions.
Well, you can actually set up with a pretty low amount, but you probably, to get going, it's you probably should put a Bitcoin into it to be really competitive with it, but you can get going with a lot less. And what I recommend for setting up a node like this is you can get a thing called the Umbrel, UMBREL, like the first letters of umbrella. It's at getumbrel.com, and it's software that packages all that you need to run a node into something that's very easy to set up. And a lot of people set them up on, you get a little Raspberry Pi, which is one of those little hobbyist computers. Yeah. And you basically can set up this $75 computer that runs your Lightning node. It's a thing that takes a weekend to put together. But if you go through that process, you can have have your own node running at home and start experimenting with opening channels to other nodes and setting your rates and starting to route payments. Well, now the kind of yield you're going to get, I mean, it's not great. Like just by turning it on, you'll probably get 1%, but there's ways you can cycle your money and get closer to 10% on your money. But this, I think, is going to increase as Bitcoin Lightning gets more popular. So if you have one set up, you might be there to kind of catch that.
I like the idea that you can do it with a much lower threshold as far as capital goes too, because I think that's one of the things that I didn't like about like setting up a Bitcoin or Ethereum like node itself is the capital requirements are so restrictive that it's out of the reach of many people's abilities.
Yeah, especially mining right now. I mean, don't even try mining Bitcoin unless you're going to do it at an industrial scale. It's just not worth it. Dan, you started to have a question, I think, before that. I'll give you a chance to ask that before I take the conversation a different way.
Oh, I was going to ask him what's the intrinsic value of Bitcoin?
Oh,
that is a great question. Okay, I've thought a lot about this. I wrote a post about this recently called "The Intrinsic Value of a Bitcoin." It's on Medium, and the whole question of what is intrinsic value is important here. And the way I like to answer this is if you think about what value is in money, back to the beginning of money, money is really always a way of transferring information. What I mean by that is if you go back all the way to the back of like the origins of currency and you like use the mental example of an economy based on shells, right? Like let's say you're on an island, there's like 10 people, you've just crash landed there, you're going to get rescued in a while, but you need money in the meantime. You can pick up a bunch of shells, right? People did this from, let's say you found 100 shells and you knew there was only 100 of these. Somehow you knew there was only 100 of these, you couldn't find any more of them, and they were all pretty much identical. And what you've got there is called the monetary base. That's all the money in the world. And then if you distribute these shells to each people, so everyone has 10, right? What you've got when you all look around at these shells, you all know that you've got 10% of all the money. And so if I give you a shell, you know that what I'm giving you is something that represents 1% of all the money. And really, that's kind of what money always is. Whether it's gold or particularly commodity money, like that, there's some amount of this thing which is serviceable to transfer information, really. Meaning when I give you an ounce of gold, you measure it, right? It's the number there. It's like, it's this much, right? It's this much. And you know, there's estimated to be so much in the world. And then so people are able to then start attaching a value relative to goods and services based upon that knowledge. And that's how an economy sort of boots up. And so what I see is that if you look at the shell economy or at gold, right? What you have in Bitcoin is very much the same thing, except for the first time, you don't need material. You don't need matter to answer that question of how much is this thing? Because with Bitcoin, or how much of all of it in the world is this amount that I'm giving you? Because with Bitcoin, you know that for the first time, a digital thing can be scarce. That's provable digital scarcity is one of the features of Bitcoin. And if you know there's 21 million ever, and I'm giving you 1 Bitcoin, you know that that's 1/21 millionth of the monetary base of the currency. And so it's very much the same thing as giving someone a certain amount of gold that is a known amount of all the gold in the world. And so, I like to say like gold is to atoms as Bitcoin is to bits. So for the first time, the creation or the implementation of this technology, information technology really called money, does not need a physical substrate, but can exist in the purely digital realm. And I think that is very powerful. And therein is the intrinsic value of it, that this network is serviceable for producing this result of this thing called money.
Okay.
But you still need to get people to put their faith in it, though. I think that's where the disconnect is. Like,
there's no governments backing. I guess El Salvador, maybe.
Yeah, well, there's no government. I mean, there's not necessarily a government backing gold either. You know, gold has been around, and so it's the same thing. Why do people put their quote faith in gold? I think it's that it has proven to be a serviceable instrument because of all the features of it. You know, its divisibility and fungibility, etc. Transportability that makes it useful as a carrier of this information that is called value. And so people have gravitated toward that for years, for many, many years. And I feel like Bitcoin has started to prove that people will gravitate to it for the same reasons, except it has superior features like that you can transport it around the world instantly.
Can I make jewelry out of it to display my Bitcoin wealth?
Well, I would say that the value of gold in terms of its ability to make jewelry or its ability to be used in circuit boards or dental work is really not particularly that relevant to its value as a currency. I think it's sort of a separate feature and that it's interesting, but it's not why it is valuable, I don't believe.
Huh.
Yeah, I don't know enough about the history of gold and why people first started mining it.
Yeah, I've always attached the gold's strength and history has always been in my thoughts as it's always been something that people wanted just because of its physical characteristics and properties. Like that's always been the link that I've had a hard time making with Bitcoin and understanding why it should stand the test of time. But I think regardless of however you feel about it, the fact is that Bitcoin has a proven track record at this point.
Yes.
Yeah, here's maybe a better example, although it's less popular than gold. If you go back in history to many different nations that had their own system of money, many times the system of money was actually a system of a ledger, of a record keeping on a ledger. For instance, there's many economies that they would record purchases and sales of real estate by marking marks in big rocks on their island.
Yeah.
Like this rock has a mark in it. Yeah, because everyone could see that the following happened. And there would be this big mark in the rock, which was a ledger that says this thing went from this owner to this owner. Other countries did it with different patterns of beads where they were marking occurrences of transactions in a ledger. And so I think money has always been sort of a ledger, and that's what Bitcoin does really well.
That makes a lot of sense.
Yeah, now you're talking my language.
I like that. Yeah, because I mean, wasn't math like pretty much developed or saw its explosion in use because of accounting?
Yeah,
I think that's true.
Like I think if you look at like the way the digits are even like how they came about, like the 1, the 2, the 3, like those are all based on like accounting principles.
Yeah.
Or
look, I gave you 10 sheep, Kyle.
Right.
I gave you 10, not 9.
There's a record here. Yeah, exactly.
Son of a
exactly.
bitch.
You mentioned stable coins increasing in popularity. I was actually curious. Would you mind chatting about the recent issues that popped up at Luna? Like, do you know why did that fail so spectacularly? And is anybody else in danger of following like into a similar pattern?
Well, I must disclaim that I'm not an expert on the Luna situation, but from what I see, Luna was a particular type of a stablecoin called an algorithmic stablecoin that was attempting to be backed by Bitcoin itself, I believe, which itself is a volatile asset. So there's kind of a problem. Like that's a big question when you have it. When someone says stablecoin, the first question you should ask is stable to what? Right?
Yes.
And so the problem with Luna is the answer to that question was not strong enough to weather the volatility of the market. And it was an interesting experiment, but it did not work. The kind of stable coins that I see are gaining a lot more traction are those that have a much better answer, at least for now, to that question, like USDC, which is put out by Circle. And there, I mean, it's really just a new way of transacting regular dollars, or what we in the Bitcoin world call fiat, right? We've got this regular dollar. What they have with USDC is what they also claim to have with Tether, although there's been controversy about whether they do. That is $1 somewhere, actual dollar in a bank somewhere is represented by these tokens. And so USDC is doing it that way. So I think this is the kind of stable coin that I'm seeing gain a lot more traction right now. I was just out in San Francisco for the Circle conference, and I had also just been at a Web3 conference in New York right before it, and the energy difference was incredible. Like there was some energy at the Web3 conference, but it's a bear market. Everyone's trying to figure out sort of what's next. But over at the stablecoin conference in San Francisco at Moscone Center, there was so much energy in that room. There were so many people very excited about working in with these stable coins. And you're starting to see companies like Visa had a booth there. You know, like, why does Visa have a booth here at this crypto thing? Because there's this narrative that's happening where crypto, and particularly these stable coins, are really a whole new way of making payments. And that has nothing to do necessarily with, you know, NFTs or metaverse stuff or games or all this other stuff that is quote unquote Web3, but just purely as a way to send and receive payments. And merchants are out there starting to want to accept USDC instead of dollars. That's happening out there in various places. And so I think that area is having a lot of energy on it right now. These stable coins that are backed by dollars.
So what makes that like, what's the special about a stable coin then? Like, why not just use dollars?
Well, I think it's because also look at it this way. There's a next generation infrastructure that is superior for moving these digital dollars around, that is far superior to the movement of dollars. I mean, think about how hard it is. I mean, there's like certain things you just can't do with dollars. You can't charge someone on their credit card 10 cents. It's not economical. There's minimums, because there's minimums in terms of clearing costs. And you look everywhere, there's all these big inefficiencies. You know, get a wire transfer into your account. It's going to take like maybe a day, maybe more.
Right.
You know, they may be like a long time, but with moving USDC, depending upon what network, you can have it in seconds. And that's what we are focusing on with Lightning Bridge, is moving these tokens very fast as possible, so that you get them immediately. So I think it's like any other thing with technology, particularly with money, whenever I see a way for money to move much more quickly than the standard way, money tends to gravitate toward that faster path. You know, money wants to move as fast as it can move.
Right.
And so when I see these USDC being able to zap around the world for almost no cost, it's just a whole new, a new way of moving money, and it's superior for that reason.
You can see why an institution would be interested in something like that.
Very much so.
That's really funny, because I used to think that was just the banks being, you know, whatever a bank, you know, nefarious but, you know, the cynical in me, basically. Whenever I say like, oh, I just moved $1,000 from this account to this account, they know it's gone instantaneously. They know the money was in one, and they know it's in the other one. They're just being slow because they can.
And they're earning on it. They're earning on your money. They're earning interest on that money. It's true.
But you're saying that it actually is that slow.
Well, I mean, I think there's incentives to keep it slow, right? Because why would they want to not? Why would they, if they can hold on to your money for the night? You know, they earn interest on that, and that matters to them.
Which means that somebody else has it at that point too, then, right? So now that I think about it, like, yeah, they have to go get that money out of whatever vehicle it's in, earning that interest, and then transfer it to the other spot.
Yes, and it's slow, and move, whether you're moving stable coins, or particularly, this is why I like Bitcoin Lightning. It is just a much faster and cheaper way and more efficient way of moving value around the world.
Do you do anything with Ethereum too? Is that tradable on your networks?
Well, yes, we are particularly focusing on what's called the Ethereum layer 2s. There's these things called Polygon, Arbitrum, Optimism, which are layers on top of Ethereum that have benefits because they're cheaper. But the answer is yes, and you will be able to move stable coins to Ethereum.
What are your thoughts on the direction that Ethereum has moved, changing from proof of work to proof of stake?
I think it's too early to tell. I think that there's a lot of reasons why proof of stake, even if it works, potentially has problems in terms of the dynamics it creates and who has the power over the network. I mean, kind of the whole point of proof of work mining is that it's not really like that. That whoever has the most coin controls the consensus algorithm. Right. It doesn't really work like that. And so I think that for Bitcoin, particularly, moving to proof of stake would be very bad. But since Ethereum is not really doing the same thing as Bitcoin, it's more a place to run applications. And as long as you realize it's that, the fact that it's moving to proof of stake, I mean, whether it should be in some ideal world, whether that's like bad or good, I think it actually might work out for them. Like, it seems to work. And unless there's some big gotcha that, like, within the next year, everyone realizes, oh, wait, it didn't work because of something we didn't realize. And now Ethereum's fundamentally broken. It's kind of a big experiment. If that happens, then it will turn out not to be good. But I think it's too soon to tell.
Is that a risk?
I would say yes, it's absolutely a risk. That's what I love about Bitcoin's proof of work mining. It works. It's been proven to work for about 12 years. And so it works. And so moving off of that to some whole new way that has never really been proven is a risk for sure.
So what is the future of cryptos then? Like you seem to be really excited and think that we're going to be moving to in a direction that these are going to be utilized a lot more in everyone's day-to-day lives, I'm guessing.
I think so. I think that some of the biggest use cases really haven't been developed yet. What I think that generally may happen is I think that these various chains like Solana and Polygon and all these, I think are really turning into almost like a next generation of cloud computing. Whereas instead of all the machines running in Amazon or running in Microsoft Azure or running in Google Cloud, these are usually this is what you do whenever you're interacting with a big online company. You're going to Airbnb, you're going to Yelp. You're really using machines that are running at one company's building. Right. And so what you have with something like Solana or these other chains is at least it kind of decentralizes that a little bit. So the code that's running is running on computers all over the world at many different companies' data centers. And so it does sort of take a little bit of power or maybe a lot of power away from the big cloud providers and puts them into this new category of distributed computing system. And I like to think of these chains as sort of the application chains where you're going to run different applications. But for money, the real money of the world, I think Bitcoin is the ideal chain for it with Lightning on top of it. So what I think will happen, or what I think may happen, is that Bitcoin with Lightning added to it may end up being that sort of clearing network that allows you to move value from one of these application chains to another. And then these application chains can focus on whatever application they're running. And I think many of these use cases haven't really been found yet, but I think they will be.
Dan, do you remember who we talked to? Was that Alex that was telling us about the use of like the blockchain ledgers and like trying to use those to like run like your logistics or use them for like contract negotiations?
I think it was, yeah. It would be like your car title is now on the blockchain.
Yeah.
I hear about this, but I still wonder, like, any of these applications where you have to like tie it to like some physical thing or a physical asset, somebody still needs to enforce that. The idea that you're, especially like real estate and stuff, you're still going to like, let's say you put a deed, on a blockchain. Well, so what? If somebody's squatting on your land and won't get off and you're going to just show them your blockchain proof that it's yours, right? You're still going to need to take that person to court and someone's going to need to come there and move them off of your land because they decided you were right. You still need a legal system in a world.
Right.
And so a lot of times people kind of gloss over that kind of stuff. Well, if it's on a blockchain, it will just work. I think it remains to be seen how useful a blockchain will be for those sorts of things versus sort of purely digital things.
I never thought of it as something for enforcement. I thought of it as something that was just better trust in the records that we do keep.
Well, yeah, but my point is that you still need that. You need force and coercion in a society to make people do things or not do things.
Yes.
Right? Anywhere. You can't just say, well, we have this great record. Everything's great now. It doesn't work like that. But it remains to be seen how that will play.
Look, didn't you see the beads carved there on the rock?
All right. Well, so I'm sure someone enforced those things even at the time, right?
Yes, exactly. Part of the word enforce, right? Force.
Yeah, right.
Force.
Yes. There's so many new terms that I'm probably going to have to spend a little bit of time researching after this conversation.
Cool.
But I feel your excitement and I really want to definitely check this out some more. Where can people find more information about Lightning Bridge? Yeah,
well, you can actually use it right now at lightningbridge.com. We're online with several chains with Solana and Polygon, and you can just play with it real easy. See how easy it is. You can use Cash App to send Bitcoin to it, and you'll see it appear on the other chain very quickly. And so also you can look for our Twitter. If you just search for Lightning Bridge, just follow our Twitter.
Awesome. And your personal Twitter at Pixel Router, if people want to follow you?
Yeah, Pixel Router, Pixel router, like the thing that you hook up to your computers at home. Pixel Router.
That hopefully works well.
Yeah.
Yeah, when can we get some blockchain carried over to fixing router issues?
Oh, right.
Can we decentralize my Wi-Fi?
There are people working on that, on different types of like decentral. Yeah, there's some things happening in that area.
I like the idea of seeing like people doing like supply chain logistics using blockchain networks.
I know there's still people working on it. There was many people working on it in 2017, 2018, but most of those things didn't pan out. But a lot of times that's the way things happen. You know, the first people to try it doesn't work, but then someone figures it out.
Well, the other interesting thing too is when you try to develop an application like that, you end up finding another use for it. Like, oh, it didn't work for this, but oh, here's this other need that this actually perfectly fills.
Yeah, that's kind of what happened with our company here. We were first making trading tools and 3D trading interfaces. And then we realized, wait a minute, people really just want to move money on and off these chains real quickly. So let's like reform this thing. And now I think we have something with a lot broader appeal. So all the time that happens.
Now, do you personally trade crypto?
I stay away from trading, particularly myself now, because I learned a long time ago the only way I like to trade is if it's a sure thing, like an arbitrage, you know, like, because I've learned that, like, seriously, like most people that trade, if you just sit there and trade, you just some people can do it. My learning back in the day was figure out how to find a sure thing and automate it. And I haven't found that yet again, but I would love to find it and do it again.
You, my friend, are stellar candidate for insider trading. Let me tell you about this thing. It is phenomenal.
Just remember, deny.
Yeah, exactly. I didn't know it was insider. I just thought it was a guy I was golfing with.
James, is there anything big on the horizon coming up for you guys? Do you want to take a moment to tell everyone about?
Well, we're just doing our first big marketing push right now. So you'll start to see ads for what we're doing right now. And we're looking to implement stablecoins across all the networks that USDC supports. So if you're into moving stablecoins quickly, keep an eye on Lightning Bridge. And that's what we're going to be focusing on.
All right, we'll make sure we need to follow up with you then once some of those things start getting implemented.
Yes.
Sounds good.
All right, Dan, do you have anything else for our guest today?
No, this has been, I think, one of my favorite crypto conversations that we've ever had.
Cool.
I think so too.
All right,
I would agree with that. One, you didn't shy away from the Dan's cantankerous nature when he challenged you on the intrinsic value.
Oh man, I love talking about that stuff.
Some people don't. Some people don't like that.
Yeah.
But no, I really liked your answers, and I'm glad. I liked what you had to say about the store of value or information, using it as basically just a means of conveying information. I'll definitely carry that forward in my thoughts going forward.
Excellent.
If nobody else has anything else, I guess we can go ahead and kick everyone out, unfortunately.
Yeah, been a pleasure, guys.
Thank you, James. This has been a phenomenal conversation. Thank you, listeners, for making it all the way to the end. I know I learned a few things. I hope you did too. We'll be coming back at you soon with some more exciting episodes, but for now, we got to close up shop. So remember, as always, like, share, subscribe, tell your enemies, tell your friends.
Wait, hang on, Dan.
Yep.
Did you give our guest a chance to? No, I'm just kidding.
Oh, no, I heard you do it, though. Oh, okay. All right. Folks, until next time, happy trades.
Bye, everybody.
Bye, everyone.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks and the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.
You made it. Checked out of office to check into the sweet views of this place where the kids aren't asking for the Wi-Fi.
Mom, can we go to the pool?
And when you're with Amex, it's not if it's going to happen, but when. American Express. Don't live life without it.
This just in. Reportedly, pigs can fly. We're going live to... Can't take another crazy headline? Well, here's something you can appreciate. The MyGM Rewards card gives you best-in-class rewards with 4 points for every dollar spent everywhere and 7 total points earned per dollar spent with GM, bringing you one step closer to a new GM ride. That's the power of appreciation. From us to you. Subject to credit approval, terms and limitations apply. Visit mygmrewardscard.com.